Hello and welcome to the Crypto Club and Digital Assets weekly catch-up on Zoom. It is Sunday, the 2nd of July 2023, and we're going to be talking about whatever the audience want to talk about. Some weeks we talk about blockchain, crypto, DeFi, NFTs, ICOs, STOs, TGs, any other three-letter acronyms really. We open these sessions up to everybody, whether you're a novice or an expert, and we welcome people to come along. There is a link in the description below. Do come and join us for a future session. So let's see who's going to come and join us today. Jimmy, hello.
Good to see you. How you doing?
Good evening. Good to see you.
Yeah, good to see you as well.
How's life in the fast lane?
I'm not too bad. Sort of, it's been relatively busy, but yeah, things are good. How about you?
Chugging along, but all sorts of things all over the place type thing. So
yeah,
kind of keep up with the crazy world of crypto at the moment.
Absolutely.
So much going on. I haven't even been following it particularly this week. And how about you? Are you still taking an active interest? Or?
Yeah, very much so. I mean, a lot of it's sort of on XRP now, just sort of waiting to see what's going to happen with that. I think that's one of the most sort of interesting things going on at the moment in terms of with the SEC and then Judge Torres and such like. So, I've really been so interested on the updates on that. So that's always really, really interesting. And then, of course, Bitcoin is just, going back up there again, which is interesting. In terms of sort of any new projects or such like at the moment, I'm not particularly on it at the moment. Not sort of in terms of the knowledge on that side. So I'd definitely be sort of interested in what's going on in terms of sort of need some new interesting projects and such like.
Okay, so certainly the Ripple versus SEC court case you refer to, really interesting because they released a load of documents a week or so back now, which related to the Hinman emails, the Hinman presentation, and a lot of other stuff as well. It's been really interesting. A quick shout out to there's a person on Twitter and on TikTok in particular who goes by the pseudonym Dark Horse.
Right.
And so if you check out, I think it's Dark Horse and Me 4.
Yeah.
He keeps getting suspended. Well worthwhile taking a look because he's actually making the effort to go through all the documents. And he's doing an incredible job and he's getting a load of flack for it as well. Because he's pointing out things for both sides. So he's looking at documentation and he's just drawing logical conclusions from it. And unfortunately, a lot of people are saying, oh, that just means that you're dissing crypto and, that you're dissing Ripple and all this kind of thing. It's like, no. This is what, the various people have been saying. So fascinating stuff on that. So,
absolutely. And it's nice as well to have sort of a bit of a grown-up opinion with these things because it's so often people are so entrenched in one sort of way or the other, normally sort of, just pro crypto. And actually, I want to hear what the other side is because, that's how you can formulate proper opinions and also proper due diligence as well. It's vital.
So that's a fascinating thing because he tends to take quite a deep dive on some of the documents that have been released.
Yeah.
And when you actually read through some of the statements that have been made, there are arguments from both sides, as to what the SEC has actually done and whether it's overstepped the mark and whether the Ripple management knew that they were consciously promoting a potential security and all that kind of thing. And all Dark Horse has been doing, he very fairly just references the documents, goes through them, extracts the interesting bits, and forms an opinion. But the problem is that everyone's taking that as, oh, that just means you're anti-Ripple and all this kind of thing. It's like, no, it's just pro-fact.
Yeah.
So, interesting. Hey, we've got a couple of other faces joined us as well. We've got JT on in the background there. That's good to see you again. And Gabriella's joined as well. Hey, Gabriella.
Hi.
Hey, how are you today?
Hi. Could you hear me?
We can hear you, yeah.
Okay, thank you.
Did you join late on last week? Was that you?
No, it's my first time.
Okay, cool. And where are you connecting from, Gabriela?
I am from Madrid.
Okay, muy bien.
Thanks. Sí.
Excellent. What brings you along today then? Anything in particular?
Yes. No, nothing. I'm
Okay.
relaxed.
Cool, excellent. Well, these groups tend to be fairly relaxed. We get to talk about whatever people want to talk about, really. So sometimes some quite interesting stuff. Sometimes we talk about the tech. Sometimes we talk about the market changes and that kind of thing. What's your kind of background and interest then, Gabriela?
Well, I start with this file years ago
Mm.
by myself. Yes, and I continue learning and
Okay.
open different kinds to learn.
Okay, that's good.
Different people, just different research, different.
Yeah. So are you mainly into cryptocurrencies then, or the blockchain technology?
Crypto and blockchain.
Okay. Yeah.
Concretely in crypto, concretely Bitcoin.
Okay.
I'm very focused on Bitcoin.
Yeah. And there's a big blockchain conference is it Madrid this week or Bilbao, maybe?
Because Summit,
Yeah.
the big one made in Madrid, but it's not just big one. It's in 2 days, maybe.
Okay. Yeah, because I seem to remember I know somebody who's presenting at that, talking about the marketing of blockchain and how it's a little bit different and that
Yes.
kind of thing. Good, excellent. Well, welcome to the session. And
Thank you very much.
And the idea is really, if you want to ask any questions, because sometimes we get novices who are new to this space, then that's great. Or if you're looking at things in the market and you know a bit more and you'd like to share information, that's brilliant as well. It really is an open session. The others who are on, we've got Jim, who's got his picture of his dog up at the moment. He and I have known each other through crypto for a few years, I guess, as he used to come to my group when we used to meet in person. And JT, well, you'll see it's got relays.io. JT is really knowledgeable, particularly on the cybersecurity side of stuff. In fact, JT, do you want to say hi and tell us anything of interest you've been hearing about?
Yeah, hi guys. Yeah, just today I'm catching up with a lot of stuff. I was in Germany last week at the Blockchains conference.
Okay.
It went on for 3 days.
And any interesting stuff come from that?
Well, yeah, just the Germans are getting much into being Germans, you know, and then just getting more blockchain, trying to be more upstream. I mean, they're trying, but I think they kind of are looking more from a government and government supporting enterprises. So very much enterprise led, you know, less of what we see in general, which is a good thing. It gave me a different perception of how different countries in Europe are trying to approach this, you know.
Okay.
So yeah, but this week, I mean, I'm just catching up. You probably saw some of the groups I was posting about Vitalik and the main dev in Ethereum, that they don't stake all their Ethereum, so they don't trust what they have done, you know, which is for me is quite amazing, you know. The main dev, he was being interviewed, you know, Justin Drake, and it was like, interview, why aren't you staking all of your Ether? Like, why haven't you aped all the way? The guy asks, you know, and then Justin Drake answers, when you make the sausage, you know how it is made. And they both of them go, ha, 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 you know, and I'm like, what?
Yeah, that's not
insane. Absolutely insane. The two main guys in Ethereum saying they do not stake everything. Oh, no, sorry. Vitalik said he doesn't stake because it's very hard to do multi-sig on staking on Ethereum. And I'm like, dude, you know, what a wrong answer. You're the top guy in Ethereum. For you, doing a multi-sig is nothing, you know?
Mm-hmm.
So he kind of because one of the guys it was a conference call, was asking why he was not staking all of his Ethereum, yeah, and the excuse was, oh, it's very hard to do multi-sig. You know?
I think the challenge is because I've been to several talks that Vitalik has given, and I've watched many online as well, and I think he suffers from the problem of intellectual honesty, that he just says it as it is. And he doesn't necessarily think through the kind of the ramifications of what he's saying.
But he didn't say
in the nicest of ways.
You are absolutely right. I agree with you, Gary, 100% on what you said. But this time, no, he wasn't really direct, you know. He actually avoided the question by saying multi-sig is hard on Ethereum staking. It probably is, but not from a guy like him, you know. He really isn't. I mean, he's a tech guy. He knows what they have done. So if it is so hard, the question that will come is, why did you do it in that way anyway? To make it really hard for people to stake? No. You know, so he kind of run away from the question there. Okay. And then Justin Drake, you know, also in the interview said that joke, you know, when you make the sausage, you know, it is made, and he laughed about it. So, I mean, that worries me a lot, to be truly honest. You know, if the two main guys don't trust on what they've done with Ethereum, why should anyone really, you know?
Well, I suspect it's one of those things. I've seen it with the likes of Ledger lately as well, when Ledger started making their announcements about the recovery service for people's seed phrases or private keys and that when that suddenly went a bit astray, they immediately started making comments to try and correct the situation, when maybe what they should have done is spoken to somebody about how you message certain things. Because, again, I think they were being very honest, very transparent, but they said things in a certain way that could be interpreted in a certain way. And that did not make them popular. So
yeah, it was a PR disaster, wasn't it?
Exactly. I feel quite sorry for so many who do this. That this is why, you know, the big companies, the FTSE 100s and that, they've all got reputation experts and business continuity experts who all, if you ever get involved in like business continuity planning, one of the first things you execute is a press management capability, and they control all the communications of who says what, when, to where. It's all reviewed and everything like that. And I think in crypto, there's a lot of companies that still haven't learned that yet. So we'll see as time comes by. Hey, so being joined by Elena as well, who hopefully has regained her hearing now. She wasn't able to make.
Yeah, I didn't. I absolutely did not last week.
Excellent. Welcome back. I've got, it says Grant's iPhone. Is that the Grant by any chance?
I hope it's the Grant. I hope I'm that special.
That sounds it. It's the man with the hat.
I got a different hat on this time, but yes, correct, sir.
Cool. How's it going, Grant? Because you've been in this space for a long time.
I have, and so have you. And, you know, whether I agree with some of your points or positions or not, I want to give you loads of respect for not being a grifter in this market and being here for the long haul and continuing pushing it. So I want to give you that respect as well, Gary. I just wanted to stop in and see what's going on and say hi. And maybe next week or something I can come on and kind of present, you know, what I'm focusing on post Coin Firm, as now, you know, I lead Copernicus Space, which is my main focus in the market.
Okay, cool. Well, the respect goes both ways. I know you and I don't always agree on things, but at least we respect each other's opinions, and I think that's the important thing. And
who do we ever agree with 100%? Like that shouldn't exist. Even if it existed, it probably shouldn't exist.
I'd be worried if we did. Absolutely. So it's great to see you. And the thing I've introduced with these sessions as well is the idea that I'll give people like a 3-minute pitch opportunity. So you're more than welcome if you want to come back and talk about any of the projects that you're working on, Grant. That'd be fantastic.
Sure, would love to, and happy to spend, you know, a couple minutes just saying what I'm doing in general, but like a more formal, you know, presentation, happy to do next time. And I see, you know, JT and some other people here that, you know, I know of that are of value, but always happy to participate and, you know, worst case, give some opinion of mine in the meantime.
So why don't we do it? I know I'm putting you on the spot here, but do you just want to share some basics for those who don't know you? What it is that you're working on, the kind of space, because it's actually the word space is probably appropriate. But we'd like to share
pun intended in this case.
Exactly.
Indeed.
Yeah. Go on, tell us more, because I can see Elena's face now. What are they talking about?
Yeah, so just quick background on myself. So Gary and I met years ago when really the London kind of crypto blockchain market was building, because I'm a co-founder and former chief marketing officer of CoinFirm, which is one of the leading platforms around analytics and specifically AML for crypto and blockchain assets. So it's us, Elliptic, Chainalysis, TRM Labs, maybe one other that are really fighting that out on the global sphere. So I've gotten to work with every type of company you could think of, from the ICO guys to the main exchanges to the main protocols. A lot of those entities are our clients, but I'm third generation aerospace. My forte into blockchain 10 years ago was in how to utilize this technology to create new marketplaces or systems for markets that monetize, digital IP, etc. But this story starts with my grandfather. So even 6 years ago, my mother and I started investing in the idea of what is now Copernic Space, which is us utilizing tokenization to create the marketplace for space ventures and their assets. So we enable space ventures to tokenize real-world space assets, such as payload on their rockets or their lunar landers, or what I love most, which is satellite imagery and data-related applications in space, to what we're focused on next year, which is releasing an application focused on tokenized and crowd-funded launchpad into space ventures or the assets they're creating themselves. So instead of being based off shares of companies, it's based off of shares in the future revenue that space assets generate themselves, like satellite constellations that are commercial, right? Okay. So we work with over a dozen leading space companies on tokenizing their assets, and right now are hyper focused on working with the commercial market to bridge their access and benefit and utility and even tradability of these space assets, like satellite imagery or space and rockets, etc. So right now we're selling in, space and rockets and satellite imagery licenses so that these organizations can benefit from what's going to be the most important and largest asset class of the future.
Wow, because I know I did some stuff a while ago, not far from where I live is one of the UK satellite imagery kind of like hubs for businesses and that. I was amazed at just how much stuff is going on, and actually how much of it is open source as well in terms of data you can access. But once you want to go beyond a certain level of either the regularity of updates or the level of detail you want to go down to, the resolution, that's where the paid market comes in. So that's a really interesting idea to tokenize that.
Thank you. Well, the issue is that, first off, space business is super archaic. So it's never entered into the digital realm. It's done like early ages of email. So you're not walking through the door unless you have 7 figures, where to go, and how to go through a many months long contracting period. And on the back end of it, you have the specialization to handle it. Our whole thing is to kind of take the space economy into, the Amazon e-commerce area, but utilize blockchain to transfer those into assets that have real utility and potential tradability. So they have a longer economic lifeline. So like if I'm putting something in a rocket, I'm creating a whole new asset. That should have its own economic lifeline. I can verify it comes from this rocket, or it's on this rocket, but it represents a Nike shoe, or it's a satellite, or something like that, and it has its own economic lifeline they can sell and trade further on. And we utilize NFTs in really the future of how this stuff's going to be used. So, an NFT for us represents, for example, satellite imagery license, and through that NFT, you access the API or the data set itself, right? Mm-hmm. So bring that real utility to tokenized assets, so they're not just like a tradable financial vehicle. That's super valuable, obviously, as well. But the utility of space, what people miss is the tangible on-ground benefits that the space economy has already, and what is going to be delivered even more in the future if we democratize this commercial process and access to them.
And your focus is on kind of like low Earth orbits, or in fact, kind of like around the Earth space. You're not talking in terms of trying to tokenize or introduce new economies for space travel and that kind of thing?
No, actually, we view ourselves as the macroeconomic solution. So the first commercial proof of concepts we built, for example, were with lunar payloads. So how do you get stuff on the moon? Like we know that the lunar economy is going to be $1 trillion economy by itself within about a decade. So for us, it's about providing this streamlined standard infrastructure and system and marketplace on top for whatever's happening in the space economy. We actually think a big problem in the space economy is like it's super segmented, super specialized. So it's like you either do this or you do this or you do this. And what's needed most in the space economy is that Amazon effect, right? Whether it's shoes or your books or whatever it is, that there's a system that encompasses the entire activity of the space economy.
Okay. The reason I ask is I was invited to review a paper a while ago, which was to do with actually providing a new financial system for space travel. So the whole idea, the problem with crypto right now is that it's still inexorably linked to the fiat economy in some way. People still do on-ramp, off-ramp, to dollars, pounds, euros, whatever. But once you're in space, say you're actually on a mission to Mars in a few years' time, you are completely disconnected from the traditional financial system. And it is, how do you develop a new economic model that operates on a space platform, whereby it's a new way of working and that kind of thing. So if you do a certain amount of work and you get a certain amount of tokens, it's a new form of money.
Yeah, we're definitely that, but you got to be pragmatic, right? Mm-hmm. Which is, our thing is not to force either space ventures or even the end commercial market, whether that's a company, an organization, or a consumer, to have to be like crypto native. I think, the success of this market overall is to kind of remove that friction and barriers to entry, but of course facilitate. And like the crypto market was mainly funded by ICOs. It wasn't funded by the VCs originally, right? Mm-hmm. And space very much shares that sort of aspect, in the sense of the models that exist today, whether it's venture capital or whatever, don't actually fit well into the needs and the requirements of the space economy. An entirely new model, in what I call commercial and financial infrastructure, needs to be built for this market, because it was never built, right? Space is one of the few markets that didn't enter that digital revolution, the e-commerce revolution, blah, 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 et cetera. Mm-hmm. And it's a blank slate. And that's why it's perfect for blockchain, actually, in a way, because it's perfectly built, because you don't want middlemen, you want a peer-to-peer environment, but it doesn't have the decades-long infrastructure, legacy systems, bureaucratic environment that is built on around almost every single other major market. And this is a $500 billion market today. It's exotic, but it's not as exotic as people think. And there's a reason why every billionaire or any company with their heads on their shoulders are looking into this market. But we need to build a bridge. You need to build it, and then they'll come.
Yeah. I find it fascinating. I first discovered about the space side of things partly because I work for an insurance company who insured satellite launches. And so you got to learn a little bit about the kind of risks around that. And also by going to one of Elon Musk's presentations when he was in London, went to a fascinating talk he gave about how he was reinventing the way you design and develop space launchers and the whole reusability piece. So I find it a fascinating market. So you say your family's been in that space. Did you say third generation aviation?
Yeah, I'm technically fourth generation aviation. I'm third generation aerospace. So the aerospace thing starts with my grandfather, and the overall aeronautics supposedly exists with my great grandfather. For us is to provide a solution, a tool that sets as a standard for decades to come. And yeah, it's a family legacy. It's built off work that my grandpa originally had around democratizing access to space. And I don't think there's a better, the conversation we're having right now is like about crypto like 10 years ago. I personally don't think there's a more important opportunity for whether you're a company or an individual to be able to enter into a market such as space, and so that it's not only for billionaires as well, right? That it's something that everyone can have participation and utility and some economic empowerment in.
Awesome. Excellent. Okay. Well, that's really interesting. I definitely look forward to if you come again and you do an actual a 3-minute pitch of just talking it through.
I will. If I can get through next week, I will. I just my music company has a festival next weekend, so it might be the week after, but I'll make sure to do so. And I'm either way very thankful, for the opportunity to do it. And once again, big props to you, Gary, for sticking in and being in this game for so long, because every bear market you have about 90% of the people disappear, and in my opinion is they probably shouldn't have been in it from the first place if that's the case.
I completely agree with some of the protocol developers who've always said price is irrelevant. It's developing the technology that matters. So I'm absolutely a fan of that approach. Definitely. That's
correct. The speculative prices of whatever these assets are is not the long-term game. It's the bigger application of this tech to either build better solutions for markets that exist, like we were doing at CoinFirm, or in the case of Copernic Space, which is building, the foundation, the marketplace, the solution for an entirely new economy, which is the new space economy.
So let's talk about CoinFirm for a moment, because that was quite heavily involved, if I remember correctly, around kind of like the validation of ICOs and that kind of thing, in terms of like evaluating that kind of thing. Do you think there's a potential of a kind of like an ICO phase 2 of new entrants coming into the market, thinking
for sure, just much more regulated? So this year we're focused on what we call SpaceMart, which is the marketplace for real world space assets on our platform. So they have utilities, it's like payload or satellite imagery. Next year we're focused on what we call Spacepool, which is think of it as a launch pad and DeFi app for space ventures or their assets themselves. And the initial versions of it we're going to have in like a la Gitcoin Kickstarter sort of thing, where you don't have to go through the regulated thing. It's not tied to an ROI based token, right? But I'm not one to run away from the regulatory reality of the situation, especially when you're dealing with the market, the size implications and the legitimacy, so to say, of the space market. So for us, it's to pass through the regulatory licensing, especially in the United States, which, matters most technically. People fear the SEC the most at the end of the day. They're the only ones that'll chase you around the world. So, we're focused on providing a model that sits, once again, as a standard for decades to come, as opposed to, okay, let's leverage crypto to be able to pull money out of the consumer or the retail market really, really easily, and it not be a long-term solution. Like almost all those platforms are gone, right? They've been sued by the SEC, they had to shut down or whatever it is. So our thing is to build something that is legitimate and serves as a foundation for this market for a long time.
Cool. JT was mentioning before, he was at a conference in Germany lately, and I was curious because I seem to remember BaFin, which is the German financial regulator, were quite interested in crypto but not necessarily supportive. For some reason, Grant, I'm thinking you were in Berlin at some point. Is that right? Did you have a German connection?
Well, we spent a lot of time there. Like the company, especially at CoinFirm, we've played around a lot in the German market, and we have people on the team who are specifically focused on the German market. And I don't know if JT was at it was in Hamburg, I think, the other last week or something like that, if that's what he was talking about.
Yeah,
so
blockchains in Hamburg.
Yeah, so we had one of our reps there who he's focused just on IP and patents for the space economy, which there's countless billions of dollars in IP and patents in space that are just sitting and there's no marketplace for it. Listen, for us, we're a global platform. Obviously, the U.S. market dominates when it comes to space. But our whole leverage thing is, you know, to take it outside of just federal governments or major corps being able to access the space economy, but turn it into SMEs. Local governments are major. So local governments don't utilize satellite imagery probably at all. And our whole thing is to give them actionable reports at affordable, you know, annual licenses. So, you know, whether it's Germany or it's the UK, you know, I love the UK market. It's to, you know, leverage solutions like ours to be able to, you know, provide that benefit, whether you're a small player, you're a bigger player, whatever size player you are. But also props to the British market for, you know, being better than, for example, the US around the regulatory environment. I think that's, you know, important, obviously.
Yeah. Well, certainly it's going to be interesting to see where the UK goes regulation-wise with crypto, because we've got the government saying they're highly supportive of it, but that message not always making it through to the regulator, who operates on a cautious principle, I guess. But there's a new law that's just been passed, the Financial Services and Markets Act, which gained royal assent in the UK last week. And one of the things that explicitly calls out is a secondary objective of the UK FCA, so that's the Financial Conduct Authority, to effectively operate a competitively friendly environment for finance in general. So it'll be interesting to see if they embrace crypto as part of that.
Well, what I worry about is that it's so finance focused that they miss, like, you know, even what I'm talking about. So, you know, tokenizing a real world space asset. Okay, how do you view that? Well, it's not a financial instrument technically, right? Like, yeah, there's a secondary market for it, but there's secondary markets for Pokemon cards, right? So, so how do you treat those things is what worries me a lot. But like I said, the FCA seems to be more open than most. So, but someone's got to pull the trigger. You know, the standard has to be set, and that's what entrepreneurs need the most, is like a clear environment of what they're operating in, as opposed to, you know, kind of PR marketing spiel of regulatory authorities.
Yeah, that sounds. It's certainly going to be interesting to see where we go on that in the next couple of years. It's a fascinating thing. Well, thanks for sharing that. I think
of
there's
course.
a lot and it's
Thanks
interesting
for having me, Gary, and happy to support as I can. So, you know, every week you do this, make sure you share something, and I'll do some promo when I join next to, you know, present and you know, help build up your community even more.
Excellent. Always appreciate it. And I love the fact as well, you're talking about real world assets, or RWAs as I call them now. I was speaking at an insurance conference last week, I think it was, and I actually said real world assets could well be the next big thing from an insurance perspective, because you got this intersection between crypto, physical, metaverse, all sorts of stuff, and the whole tokenization of real world assets is a fascinating crossover, because that's
last thing I was going to say, because you brought up the insurance thing, sorry to interrupt around that, is that's going to be a massive new market for the insurance industry, is because you got to look at it like infrastructure, or we have real estate investors, or guys who are in shipping and logistics, right? But it's a whole new, it's like the discovery of the new world. New standards need to be created. New players can come in and benefit. You might have an insurance company come into the space economy that's not known in the wider, or it's not a major player in the wider insurance market, but they're going to come in, they're going to plant that flag, and over time they will become a major player because they've provided a solution to a market that's $1 trillion market, just like whether it's real estate or whatever it may be. I think insurance is actually going to be fascinating with launches, et cetera. And that industry technically exists. It's just kind of very specialized for the moment.
Yep. Yeah. Well, this is it. A lot of the businesses actually run through London, because Lloyd's of London is the specialist marketplace. And that's where the underwriters are actually based to understand this market. So as I say, I used to work for a London syndicate, and we had a satellite launch book, and we were probably one of the few companies doing it. And it's funny because satellites been getting launched since the 1950s, or certainly rocket launches. So, you know, it's a 70-year-old market. There still isn't that much data on it, because until Elon Musk has kind of like ramped up the pace of things, there aren't that many launches per year to learn from. So fascinating. So Anyway, thanks for sharing that. I see we've just been joined by, it says Zetage. Well, that gives me an opportunity to break off and quickly check for anyone who's been listening to that so far. Anyone want to throw any questions at Grant while he's still on the line?
I've got no questions, but I just wanted to say that tokenizing space assets seems an amazing idea to me. I've never heard about it before, and why should I? But yes, it's amazing and has great potential.
Thanks, Elena.
Thank you, Elena. Appreciate it. Always nice to hear.
Thanks.
It's good. That's the thing I love about this whole, I'm going to use the word space, and I didn't mean the pin on that occasion, that you get to discover so many incredible areas of opportunity. And, whether it's as in like physical things with this, or whether it's linking with the metaverse, or whether it's VR and AR, I used to get involved in satellite imagery a little bit. There are amazing markets that most of us just don't know about. And when you start looking at things like either tokenizing it or providing access to the data in different ways and democratizing it, I think there's such massive opportunity. I just need to work out how to make money out of it. That'll be the trick. So, JT, coming back to you for a moment, if I may, you're saying you were at the conference and some interesting things coming up. Anything else happening? Because usually you say, no, there's nothing much happening. And then at the last minute, just as we're finishing, you just say, oh, just before we go, I just wanted to mention, and then some meteors about to hit the Earth type thing.
Yeah, all the stuff only around the ETFs, and people are finding more and more stuff around that. It's fascinating how so many of them just appeared like that,
So do you know what the latest is on that? Because for those who don't know, ETF, electronic traders fund. So this is a way of putting a wrapper around crypto, is probably the simplest way of describing it. So it becomes a financially regulated product that is offered by financially regulated companies. So BlackRock, I think it was, applied for an ETF the other week. Somebody else did. And up till now, in the USA, there hasn't been a single ETF that's been approved, if I remember correctly. So
spot ETF.
Spot ETF. Okay, so talk us through a bit more. A spot ETF is where you got the market price. Is that right?
Sorry?
Well, so tell me what a spot ETF is.
Yeah, it's pretty much, it provides a way for investors, including retail, to invest in Bitcoin, but without actually having the keys, yeah? So what we need to understand is the difference between how the price is calculated, because there's futures, there's I think 3 different kinds, yeah?
Okay.
So it can be very volatile, yeah? When you go into a Bitcoin spot ETF. Sorry, yeah.
No, I was going to ask the simple question then, that effectively it's giving you exposure to crypto without owning the crypto. So how ultimately is that different to how eToro work and Revolut? Because they both give you the ability to buy and sell what you think is crypto, but actually isn't. It's exposure to crypto. Is this simply that an ETF is a recognized financial instrument?
Yeah, it's pretty much that, so you just don't own it, yeah? You don't have the keys.
Okay.
Yeah. And you just, it's a form of investment that actually tracks the actual price of Bitcoin, yeah? Instead of going, if you go, for example, for a future ETFs, which already exist, yeah? It's about future contracts, yeah? So it has a determined date, it's a specific price on a predetermined date, that's what the futures is. The spot ETF is pretty much what it says, spot. Yeah, there's not much more to say about that. I don't even know how to explain it in a different way, but it is. Sorry, yeah.
I was going to say, so it's basically, it's the equivalent of buying Bitcoin at a particular point in time, but you're not actually buying the Bitcoin. You're buying the right of the value of it at that time, I think is one way of describing it.
Yeah.
Okay.
I would agree with you that, yeah, but there are several concepts, actually for spot ETFs, and that's why different ones have been launched, yeah. Okay. There is no kind of there's a standard, this is what the spot ETF should be looking like, yeah. But, one of the things that you will see on the BlackRock ETFs is actually quite worrying,
In what way? What's worrying about
it? There's a paragraph on page 24, that says that any point in time, if there's too much volatility, that BlackRock could consider to use any other hard forked network. So independently of the actual value of that network, in a way to protect their customer assets, Okay. So a lot of conversation. Sorry, yeah.
No, I was going to say this is beginning to ring bells now, because I remember one of the problems, and I remember reading some of the documentation. Although I'm not as my memory isn't so good as to remember which page of the document it is, like you. But I do seem to remember there was a comment that if they give you effectively exposure to Bitcoin, so you buy Bitcoin at $30,000, and then there's a fork, what they're saying is that they reserve the right that they return the forked version of the crypto, which is kind of strange. For those who don't know, if you've got Bitcoin, for example, and there's what's known as a hard fork, so this is where there's a split in some way into two blockchains. One's the original Bitcoin, one's, say, Bitcoin Cash as an example. Then usually, if you own the private keys to the original Bitcoin, effectively you get ownership of both sets of Bitcoins, both the original and the forked version. What BlackRock was saying, if I remember correctly, is that if there's a fork, you only get to retain the value of the original fork. You don't get the new one. So it's kind of free money for them, which doesn't sound very fun.
A lot of people are worried is that when it says that, they can actually go to the SEC and say, hey, there's this new fork that miraculously just appeared, always not connect to any companies that they own, or maybe, that's the curious part here, is that they can just decide to move all the assets just to the other one, and continue with the other one. So what that means is, let's say they invest or they have some friends that started a new fork of Bitcoin, with their own validators. If they decide to go to that fork because the current Bitcoin network is too volatile, let's face it, it has been and it will continue, and probably all this money, it means probably go very quickly, maybe to 70K, to 100K, whatever, and then it could just dump very quickly,
Mm-hmm.
They can make a decision just to dump everything on the current Bitcoin and continue on the other one. So basically destroying what the Bitcoin is today and start a new network that they control.
Yep.
And, of course, these big funds, that's one thing they like to do. We all know that, They like to control, So people already coming up with conspiracy theories, which most certainly, for me, we will probably see one of those scenarios to happen,
Maybe they're trying to get their own back on GameStop. or an interesting one. So just Zitaj, you keep joining and leaving. I'm guessing you've got some connection problems, but if you want to say hi, you are welcome to. And if you want to stay, hey.
Hi guys, how are you?
Hey, we're good. I noticed you're dropping off and joining in everything. Well, welcome to the group. We're talking about all sorts of stuff right now. What brings you along today?
Yes, thank you. Actually, right now I'm in Pakistan and we are celebrating Eid holidays, and it's a lot of pressure on the network. So I'm just, coming in and going out. You guys keep your discussion I'm enjoying it, and I will join you guys and share my point of view later on.
Excellent. Well, Eid Mubarak.
Eid Mubarak.
Excellent. So, well, do keep listening, and if you have any questions or anything, do fire away. That's fantastic. We've only got about 15 minutes left, so I was going to open up if anyone's got any other comments or thoughts or anything. Fire away.
Can I ask?
Actually, yeah.
No, after Zaytaj.
Oh, thank you. Actually, this is my first time I'm joining your group. Basically, are you? Your topic is Bitcoin, cryptocurrency, and NFTs. I have a. It is, yeah.
It's everything. Yeah.
Yeah. Basically, I'm an owner of an IT company, a UK-based IT company, and I work in artificial intelligence, data science, and cybersecurity across the globe. I have a contract with big brands like PUBG, and I'm the only Pakistani who got signed up with Google in data science.
Okay.
So I have a client, two clients, one from UK and one from South Korea. We are building their coins. We are helping them, providing them service. They want us to build their own Bitcoin, and they are going to launch it next year. So I'm involved in a kind of deep kind of IT and stuff like that.
Why Bitcoin?
Yes, I can
Well,
build Bitcoin.
Why are they basing it on Why are they basing it on Bitcoin? Is my question.
Sorry.
Why are they basing it on Bitcoin? Is my question, because Bitcoin's amazing but has limited application. So that's my question.
Sorry. Can you repeat your question?
Yeah. Why are your clients focused on it being on the Bitcoin network as opposed to something else?
Basically, the client is PUBG, so they are they have already got money and assets, so they want to explore crypto as well. So it's a business, There's a market after 5 or, it's Bitcoin is still, it's, they have a legality going on with the governments, and some countries allow them, some countries like Pakistan, India, and conservative countries, they are not allowing Bitcoins, and they're stopping it. So basically, it's going to be the future economy after 4 or 5 years. People are not realizing it, but people who are in Bitcoin or who are in a data mining, they understand it, that this thing is becoming a very good entity for the businesses.
Is the answer to Grant's question as to why Bitcoin, is it simply because that's the cryptocurrency with the largest exposure and dominance in the market at the moment? Is it as simple as that? Yeah, it's, in the coming future, right now is a digital currency. So there are people, I have talked with them, they are working on a banking system which support crypto as well as the other banking, the money currency. Mm-hmm. So basically, crypto itself is in research, is a research product right now. It is related to, some people related to the Web3, but still it is for next 5 years, it is going to be a research product. So we will see ups and downs and, a lot of things. And a lot of companies contact me to make their own cryptocurrency. So it's booming, it's coming, it is there. So before I forget, do connect with me on LinkedIn, because I might be doing some work in Pakistan, and I'd be interested in having a conversation with you at some point. So if you just Google Gary Nuttall crypto or something, you'll find me on LinkedIn. Feel free to connect. Now, IT, the backbone is artificial intelligence, data science, and cybersecurity. With these three, and on the other side, there is a blockchain and crypto, and there's a big kind of war going on between a lot of, stakes and companies because of the artificial intelligence. So
right now we are focusing more on, I'm focusing and my team is focusing on more on cybersecurity, and after this artificial intelligence boom, because a lot of systems are vulnerable, and the hackers can be a big threat for digital assets.
It'd be interesting to have a further conversation with you. The conference I was presenting at the other week, it was actually the insurance sector, and I was explaining how cybersecurity is going to evolve quite rapidly soon. And so cybersecurity insurance is going to have to change because the risk profiles and everything are getting quite interesting. We should definitely have a catch up. Do reach out and we'll have a chat separately. So,
yeah, definitely. Thank you very much for your time, Alina. It's the last time, so you can take it from there.
Yeah, cool. Excellent.
Now we have just a couple of minutes left, and I have a little question.
Yeah.
And that's about something that we've been speaking before. Gary, you said that Revolut they don't send crypto to the clients, they send the exposure to crypto.
Mm-hmm.
Would you please explain it?
Okay.
What does it mean to send the concept of something to clients?
Yeah. So if you actually physically have possession of crypto, what that really means is that you have got the private keys that allow you to sign transactions to take amounts out of an entry on a blockchain ledger somewhere. So imagine we've got this ledger, a big database somewhere that says, Elena has got 10 Bitcoin or something, okay? If you've got the private keys yourself, that gives you the ability to sign transactions for you to transfer an amount of those Bitcoin out of that wallet, out of that address, okay? And this is why it's important that you've got private keys which give you the access to that crypto. Mm-hmm. What sometimes the likes of eToro or Revolut and some other companies do is that they don't give you private keys. What they say is, if you buy £100 worth of Bitcoin, we will give you the beneficial interest of £100 in Bitcoin. So you don't have the private keys, you have a right to the value of the £100. So it means you don't actually have physical possession in any way. You don't have the private keys, but you can still transfer things. So I'm trying to think of a real world comparison of it, where you don't actually have the amount, but you've got the equivalence. So this is why you'll quite often hear people saying, not your keys, not your crypto, because if you haven't got the keys, it's not actually yours. So that they're giving you a representation of it. And some companies do that because it means they don't have to send you the private keys. They actually own the asset. So it's effectively about, like, if you imagine you've got a fund in some way, and that fund represents, £1 million worth of cryptocurrency, you have effectively shares in the fund rather than shares in the cryptocurrency. So imagine you've got a match of £1 million worth of Bitcoin. The equivalent is a bank account with £1 million, which is associated with that Bitcoin. What they do is they give you rights to the £1 million, which owns the Bitcoin. So it's kind of weird because it means you don't actually own the Bitcoin. I hope I've not misrepresented how that works. But in essence, what it means is that you can transact and it looks as though you're using Bitcoin or any other crypto for that matter, and you're actually not. You're transferring the value of it without the actual underlying thing. So I guess in a way it goes back to the old story of the Dutch tulip bulbs in the 17th century, where you had a situation where the bulb producers in the Netherlands eventually realized that rather than taking money for bulbs and transferring tulip bulbs and everything, they produced certificates of ownership of the bulbs. So you didn't actually have the bulbs, you had certificates. And then what that allowed you to do was start trading the certificates of ownership as opposed to physically transferring the bulbs. So it's kind of similar to that in a way. Does that make sense?
So yeah.
Okay.
So it's kind of worth buying crypto via Revolut, but still, isn't it better to have your own keys?
Yeah. So what it means is that if you've got your own keys, you've got complete responsibility and ownership. So it doesn't matter what happens to Revolut or eToro or anything like that. You've got the keys, you've got complete control. The trade-off with that is you've got complete control. And therefore, if you lose your keys or you lose access to your wallets, there's nobody you can go back to. Whereas the likes of the exchanges who operate wallets and eToro and Revolut and that, is that you can at least turn around to them and they usually give you like a user ID, a password. They use, normally it's two-factor authentication. So that'll be like a user ID and a password. And so if you lose access to that, they've normally got a process for you to say, I'm really sorry, I've lost my password. Can I redo it? So they effectively manage that risk in a way by managing it and processing it, usually for a fee in some way as well. So it depends how much you trust yourself. It is probably the easiest way of describing it.
Yes, thank you.
Yeah. So yeah, it is one of those things that I give credit to both eToro and Revolut that they've introduced a lot of people to the world of crypto without them necessarily having exposure to actual crypto. So a lot of people think they've got crypto. And when you speak to them, they've got an eToro trading account or they've got a Revolut account. And unless they've got a wallet where they hold the keys, then they don't actually own the crypto. They own the underlying rights of the crypto. So it's kind of reduces the risk for them in a little way. So hope that explained things okay.
Thank you. Thanks.
Folks, we're coming along on the hour and we've got people dropping off now anyway. So I was going to close this off unless JT's got anything final to say or Gabriella. I was going to close this off and say thank you everyone for coming along today and hopefully another interesting session.
Thank you very much.
Thank you so much. Thank you so much.
Have a great day.